Hi, good afternoon, and welcome to another update on the daily market movements as of yesterday. And today is Tuesday, October 11th, and the time right now is 12:56 in the afternoon. And let's recap what happens over on Wall Street last night. Basically, the market continued to slide after last week's week closing. The main factor that is causing the market to slide has been the reaction to the Chip 4 legislation that's passing through Congress. Basically, is to restrict companies producing microchips from selling any of their products to China, and that affects big companies including NVIDIA and AMD. Of course, every company within this space, including Taiwanese chip producers like TSMC, as well as Chinese inland local manufacturers. Those are also their stock prices actually are also negatively impacted. So yesterday, the sentiments overhanging the market was due to this, and of course, the market is also looking forward to the midweek CPI numbers as to where the Federal Reserve is likely to take interest rates. And if the CPI numbers does not come in low enough, then it will give the Federal Reserve even more conviction to press on with very aggressive rate hikes. So this is what the market is looking for. But yesterday, basically, it was spillover sentiments from the Chip 4 legislation, which targets the microprocessors, microchip producers. Okay, so that was the negative sentiment going forward. Dow Jones did not quite break the September low as yet. The low, as you can remember, was 28,725. So yesterday, market came very, very close, but not close enough to break it. But however, in the S&P 500, the challenge of the September low was a little bit just a hair breadth away. In fact, it was only 4 points away from the September low of 3,588. Last night low was 3,580. The lows in September was 3,584. Last night low was 3,588. So you were just a hair breadth away from taking out the September low, and that is what the market is likely to do going forward within the week itself. Okay, it's very highly unlikely we're going to get a decidedly much lower CPI. Yes, the energy prices has come off, food prices has come off in the months leading to the latest expectation. But again, we can see that energy prices is now on the rebound, so maybe the impact will not be that great. I think the Federal Reserve have already said that they are going to be very data dependent to decide on the next interest rate move again, and I think the market is gearing up for decidedly higher rates going forward. And of course, in the background itself, the other macro background in which we will have to be more concerned with, remember, in the last week of September, we have a massive sell down in the bond market, led largely by the UK tax cut proposal. Of course, this week they have revised, they have made a U-turn on their policy, but the bond market is actually very fragile right now. And after that stress 2 weeks ago, I think the market is still hanging over, this sentiment is still hanging over the market. And yesterday we got news that the Bank of England has actually doubled down on the amount of money they spend to support the UK gilt market, which is their equivalent of the bond market. So the fact that they have doubled down on the amount of resources to support the local gilt market implies that the problem is quite severe. Okay, if not, why would they want to double down on the amount of money that they spend compared to last week? Okay, and of course, correspondingly, if the UK bond market is stressed, we can also extrapolate that the European bond market is even more stressed. Okay, so if either or bond market actually fails and cradle, it will have a very serious impact, because the market is telling us that it cannot sustain any more higher interest rate, but the Federal Reserve have their own agenda. They are not going to listen. In fact, the IMF and the World Bank has been telling the Federal Reserve, stop the aggressive rate hike, because it's causing too much stress in the credit market, which right now is on the verge of cratering. Okay, but Federal Reserve will do what the Federal Reserve want to do, and they are not going to listen. So if that is going to be the case, it's quite inevitable we're going to see more stress in all asset classes. If the bond market actually cradle, okay, because the interest, the yields spread between Italian bonds and German bonds, Spanish bond and German bond are widening, and it will cause a lot of institutions to dump the bond market, okay? And that is not what we want to see, because that will cause a massive knock-on effect in a sell-off that will drag down the equity market to lower. That will be the risk that we are facing. But we have already covered that yesterday. In event of a very aggressive sell down anywhere in this area, which is in the S&P 500, if the market goes down to 3,100 to 2,008, I think this bracket is the target range for me. So from now until then, there is that risk the market will sell off aggressively towards this area, and that will be what I'm expecting to see in the days and weeks going forward. Yesterday in the Nasdaq 100, we see that the Nasdaq actually broke the September low. Now the Nasdaq 100 is at the year's low, largely because of the Chip 4 Act that we mentioned earlier on, in which the US is trying to restrict companies from selling any kind of chip technology or even products to China, and that is causing a lot of stress in the technology stocks sectors. Okay, so it was only natural that the Nasdaq 100 actually came off yesterday aggressively to take out the September low, the first of the major index to take out the September low. Over in Hong Kong, we can see that the Hong Kong is currently trading at the year's low. It took out 17,000, go down to 16,899, 869 this morning, and it looks like there will be lower prices going forward because the entire sentiment in Hong Kong is really, really bad. And we are in the second day of the reopening of the Chinese equity markets after their Golden Week holiday, and today the market actually took down a key price point. The price point was 2,957. This morning low was 2,953. So technically the market right now has entered into a bear market phrase. As far as I'm concerned, the market is pretty bearish right now, and there's every likelihood we can see lower prices. If the market takes out 2,863, which is the low for the year, I think that is very, very possible. So do watch out for this move for the market to go down to take out the year's low, which was registered in April of this year. Okay. Let's go and take a look at currencies. Dollar versus the yen is edging towards taking out 145.90, which is the year's high, and the market is no longer too concerned about whether the BOJ is going to come in to intervene because it has failed to create the necessary impact that they hope to achieve during the intervention about a month ago. Now the market may actually take up 146. Yesterday was a perfect time for the market to take up 146, but it did not happen, largely because yesterday we have a Japanese holiday. So if the Japanese regulators are not watching, that will be as good as any other day to take out this important barrier. And I don't think the market will stop at 146. I think it's going to go to 147.67, which is the 1998 high. And it may not even stop there. I think it will gun all the way to 160.40, which is the 1990 high. So this is a very nice round number. I think this is where the BOJ may come back in again to intervene. But again, if they only do it on their own without a concerted effort by the other central banks, it is likely to achieve very little. Okay, so we have to watch that. Sterling overnight continues to edge lower, but it did not move down aggressively because the Bank of England was in the market supporting the gilt market. So basically that had a spillover impact on technically supporting the sterling as well. So for the time being, sterling versus the dollar basically right now is holding water at about 110 levels. Okay, but the picture doesn't look great. I was expecting, technically speaking, there should be another leg higher to 120, but the fundamentals are all wrong. So I have no position right now. I'm just basically watching the market and see how it pans out. Okay. Likewise for euro versus the dollar, the pullback in the euro versus the dollar was actually a lot deeper. Now currently market is at pull back almost 80% from the high of $1. So the market is likely to take out the 95 cents. If that happens, the market is going to go all the way down to maybe the 88 cents level. So in the immediate future, the money is still on dollar going higher, and the other corresponding currency to go lower. Okay. When we take a look at the energy markets, last night crude oil went up to $93.64 on the back of last week's OPEC plus decision to cut production by 2 million barrels a day, and that actually provided a floor under the energy markets. So last night's surge to $93.64 did not come as a surprise, and after that, you can see the market actually do a reversal. The market right now is pulling back. Hopefully, it can pull back to below $90 to allow me to reposition my long. I have currently got out of all my long position. And on the 60 minutes, you can see that this price chart here is pulling back. And hopefully, we can see a three-way pullback, ideally to just under $88, because I have $89, $88, and $87. These three major levels I have buying orders that are pending, and hopefully I can get some of this order done, because going forward, $100 per barrel is almost a foregone conclusion, and I think that is where the market is heading going forward. And in the gold market, yesterday we also see a pullback in bullion prices. Gold went down to as low as 1,660 this morning, and this pullback is a lot deeper than I was expecting. In fact, I was expecting a very simple three-way pullback somewhere around $1,688, but it actually extends lower. So I'm already long three levels in the gold market, and currently it's not making money, and at any rate, I've already placed my stop below 1,640, and hopefully this trade will survive. If it does not, so be it. We'll try again another day. In the silver market, we also see a much deeper pullback than expected. The market right now is pulling back 100%, so it has not pulled back as deep as the gold market itself. Currently, market traded to a low of $19.36, and there's every likelihood from here we may see a reversal. Hopefully, that will pull out the price of gold as well if that happens. Okay, over in the crypto markets, you can see the prices are also backpedaling. Bitcoin right now is barely holding above $19,000 after achieving a high of $20,469 last week, and we can see prices are still pulling back. Overall, the entire space here is seeing lower prices overnight. You can see the Ethereum is also pulling back. There is that risk. Now, when I show you the daily time frame, there is a risk that the Ethereum price may actually go down below 1,200, maybe to as low as $1,180. That will be a great level to consider repositioning long, because I think the market is going to do one last flush, okay, to take out the weekends for those who are already buying, for those who already bought. I think they want to shake off all the weekend and then do a reversal from ideally around $1,180 on and lower. So that will be where I think I will take a look again at the crypto space. Currently, I have no position. I'm just waiting for this one last push down, and then to see how the market reacts. If the market reacts, with a reversal, maybe I will jump back in and go long. But for the time being, I think there is that risk of another sell-off in crypto market. Even Ripple, technically we should be able to see higher prices, has not been able to challenge the 55 cents. The highest it went was 54 cents, 54.8 cents, and it has stuck there. Yesterday we have a pullback, a relatively deep pullback, and now currently market is below 50 cents. So I've always maintained that, of course, this coin has been going up purely on the basis whereby analysts believe its lawsuit with the SEC, which is the Security Commission, claiming that in the early days when Ripple was offered to the American public, it should be categorized as a security. Therefore, it comes under the ambit of the SEC. Ripple Lab says that it is not, and most analysts believe that they have a case, and there's a very great chance that the Ripple Lab will actually win this case, and that's the reason why the Ripple coin has been relatively stronger relative to the other altcoins. Okay, but regardless of the verdict, because the market has bought up the coin to the point whereby they are just waiting for a verdict, and a verdict may come in about 7 days time on October the 18th when the court resumes hearing. And if that is the case, if the verdict is a positive one, meaning to say that Ripple Lab actually win the case, there may come a time whereby there is this thing called the buy the rumor, sell the fact. Because once the verdict is out, those people who have actually bought the coin would have been vindicated, and they have no more reason to continue to hold on to the long position. They may decide to sell off, to liquidate, to take profit, and that will cause prices to come down. Or worse, if the verdict come out to be negative, they lost the case, of course, all hell will break loose. The coin, the price of this coin is going to unravel big time. So regardless of the verdict, I think it is a sell. Okay, so if the market goes any higher, look out for opportunity to see if you can position a short. Okay, because right now the spread between Ripple coin and the other altcoins is widening so much, because the other coins are all going down as you can see in Bitcoin, in Ethereum. Only Ripple is on the way up. So the spread between these two Ripple and the other altcoins is widening to the point where if there's an arbitrage opportunity, it will definitely cause a sell-off in the Ripple coin. Okay, when you look at the other coin, look at Cardano. Cardano currently right now is at the all-time low. This morning it went out to 0.38 cents, and this is the lowest it have ever been since the launch of this coin. You can see that this is the long-term chart. I won't say long-term chart, this is the longest I can have as far as this coin is concerned. You can see this is the lowest it ever been. It broke the 39 cents, and there's every likelihood that it will extend lower. Okay, Solana is basically barely holding water above $30, and nothing much is really happening in Solana. Even Polygon is also treading water at around 80 cents level. So nothing very much is happening in this space. However, Binance coin is under selling pressure because last week Binance, the exchange, actually reported that they have been hacked, and as much as $800 million worth of coins has been stolen. So that of course create a negative outlook for anything related to Binance. And of course Binance coin is directly linked to the exchange itself, so the prices did not sell off big time, but it's of course coming down to $267.20 as of this morning. So by and large, you can see crypto space prices are coming down, waiting for maybe some kind of catalyst, and the catalyst is likely to be the CPI report, but more likely to be the next FOMC meeting, which is not due until November 1st and 2nd. Okay, so from now until then, we have 3 more weeks to go, and 3 weeks is a long time for trading, so we will have to watch. In the meantime, I have no position whatsoever in the crypto space. I'm just waiting for the one last push down, especially Ethereum, to $1,180, $1,180, and then see if I can position some long there. Okay, so that's all I have for you for today, and I'll see you again tomorrow. Take care.